Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Oana.
Okay, so we have an update for the Las Vegas real estate market. The market is absolutely on fire. It is going crazy right now. I actually was shocked when I pulled up the weekly numbers. We just literally got them just hours ago. Today is May 1st. This is our 995th video.
Wow. Okay, so that's your cue to like the video, subscribe, and hit the notification bell. We are on our way to our 1,000th video, so hang in there with us. It'll be a fun ride. Look, you only have 5 to go. Just subscribe and hit the notification bell. You only have to hang in there for a few more days.
Yeah, we're not sure what we're going to do on that 1,000th video. We may try to live stream. We've never done it before and answer live questions or do something like that. But we may not. We may just like submit. We may have people submit questions.
I like that. That's what we should do. We should do questions.
Okay, they submit questions.
Yes.
Okay, so this is what we're going to do. If you have a question to submit, put it in the comments for our 1,000th video, and then we'll go answer all the and if some of you answer the same question or ask the same question more than once, we'll just combine them.
Right. But asking us specific questions about your market, as much as we would love to give you those answers, we are not experts in your market. So we respectfully decline answering specific questions about your market. Some people have asked me questions and I've said, well, come back to me with a zip code or something more specific, because then I can do a little bit of research. But if you just ask me about this broad metropolitan area, then I find that a little bit difficult for me to answer those questions because I am not familiar with your market. I can do limited research, but I'm not going to become an overnight expert on your market.
Right. And no too personal questions. If you want to know where the name Oana comes from, we'll answer stuff like that. But
you can ask any personal questions you want, but
yeah, we're not going to answer them. We'll skip those.
Yeah, we may not answer them.
Okay, so here's the latest data for Las Vegas. We start with this market action index. It says slight seller's advantage. It's literally has said that pretty much. It's been a seller's advantage now in Vegas probably for 15 years.
I thought it's been a seller's advantage since the 70s, but okay.
Okay. No, there was a buyer. There was a buyer's advantage back from during the housing crash.
Yes.
But what's interesting is, and I think we've got another slide to show you this, but it's literally we have a hotter market now than we had in all of 2019.
Yes.
The whole 2019, which was a normal year. Okay. Now what we're going to do is we're going to flip over to the first metric. Okay, this is median list price. This is just the most recent few months of it because we're going to let you see this little chart, here. Median list price was $485 January 13th. We saw this thing leveling and starting to go up, and we said the housing market has hit a bottom. And we said this in January. And we got laughed at by people, right, Oana?
We did, and the Crash Bros actually included us on their videos. We were so honored, and said that we were, well, we won't say what they said. It wasn't polite, but here we are, and we were proved right that at least for the time being, the market has continually gone up since January.
Yeah, and this is normal for this time of year. So before you get super excited and say, hey, you're blah, blah, blah. Look, we're just saying that this is what it did. January 13th in Las Vegas, the median list price was $485. It's $550. Okay, that's $65,000 more per a median list price. Now it's possible that the mix of homes change and there's just more homes in the higher end that are listed because this is a median number. Now I've got other charts to show you though that are gonna maybe make you realize what's actually happening. And it's potentially likely that this will change in the fall. It does every year, right?
Sure.
Okay, the next one we're going to look at is price per square foot. Now back in January of 2023, median price per square foot was $249. Okay. Now remember, this had been like $260 at the very peak of the market. It was like $260. It's back to $249. So it's dropped 3 or 4%, which we said it would adjust, right? We said it would adjust. But it's $256. So let's put this in perspective. That's $7 a square foot. That means, in theory, your 2,000 square foot house is now worth $14,000 more dollars. Does that happen in a crashing market?
No.
Okay. We were also told in February, oh, the rates are going back up. They're going to go back up. Rates are basically the same. They're in the sixes. They've been in the sixes from December until now.
Right. So the rates haven't done a whole lot, and we don't anticipate them having a whole lot of movement. Maybe there will be some movement up and down, but nothing exciting. I know I've said this like since probably the fall that 2023 was going to be a boring year. No drama, no excitement. But this is kind of what it's proving to be. It's proving to be a normal year. And a normal year means that real estate goes up in the spring, it levels off in the summer, it goes down in the fall. It just kind of, this is what happens. But I know that the Crash Pros are making it exciting, and I'm not. I'm just making it real.
Yeah. Okay. Here's another thing. In January, and this is just the city of Las Vegas, and these are homes, town homes and single family homes. There were 4,000. Okay. Now remember, there's like 400,000 houses and townhomes in the city of Las Vegas. So it's about 1%, which is probably normal. Mm-hmm. But now we have 2,500. Now, what's really interesting is the total number of sales now compared to a normal year is probably 30% less. Mm-hmm. So you have to ask yourself a question. If sales are down 30%, where's you would think inventory would be climbing, because we were told last year the inventory would climb worse than the housing crash, which would have had to get to about 40,000 for the whole MLS, okay? And then we're down to 2,500. We've literally lost 40% of the inventory that's gone. Like we have 25. If you would have bought a house in October, November, December, January, you would have many more homes to pick from than today.
Right. So what that means is, the minute we list a home, I get phone calls asking, do you have offers yet? It's like, it went in the MLS like 20 minutes ago. What do you mean, do I have offers yet? But this is the reality of it. And depending on the price point, there is so little inventory that people are calling in and asking, hey, do you have anything off market? Do you know anybody who's thinking of selling that we could take a look at their house and give them an offer? This is a real thing. There really are not a lot of homes for sale, and it's not just Las Vegas. We chatted with one of you guys, one of our YouTube family today, and he was talking about San Diego and how his friends are looking for properties. His friends are bidding 10% or more over list price, and they're not getting the house.
Yeah, like I think
somebody else is bidding more.
Somebody they offered like 30,000 over list price and didn't get it, or something crazy like that.
Right.
Now median prices there are 800,000.
Right, it is.
But still,
one of the examples I thought that he gave was that the house went like 85,000 over asking, and that it was like a 600 and some odd $1,000 house,
That's
which
crazy.
is my point, that it's more than 10%. So depending on where you are, it can be a challenge for buyers to buy properties, and it's still a strong seller's market. Now, this is not everywhere. This is just what's happening in San Diego. In Las Vegas, we don't have multiple offers to that extent. We do have multiple offers, not on all the properties, just on a few. And homes are selling. The homes that are priced well, the homes that are well maintained, and as I call them, the pretty houses, those are selling. The homes that are wallflowers, they're homely, they're priced optimistically. Those homes are staying on the market.
Yeah. We recently listed a house that in a normal market was probably $30,000 more, $40,000 more than was actually potentially worth based on comps. But because there was no inventory, literally people were calling, and just like Oana said, the first call we got was, is it available still? And we're looking at the list price, which was a bit on the high side, thinking, did you look at comps? Yeah, it's still available. And then they were totally like, yeah, can we go see it today? And we're like, it's too soon. We need to let the seller know it's going to be some time. So that's a super hot market. Okay, we're going to jump into the next slide, because the next slide is the fun one. Mm-hmm. Okay, this is median list price. Now, you can see the trajectory of median list price here. What's most interesting about this is if you go all the way back to 2018, you could see that median list price from today, May 1st, moving forward, was going up at a very slow rate. We were already sort of through the big spring buying season. If you look at 2019, it was sort of a blasé it was just not doing much, right? It was just barely going up. If you look at 2020, it had already started going down. May was the peak. It started going down, then it went back up when the COVID craziness happened. As you can see, 2021, we had quite a bit. But last year, 2022, the hottest year ever in recorded real estate history, you can see that trajectory of that list prices going up was already starting to, die down, because remember, interest rates had shot up so substantially. By the people right now listing homes, we're saying, hey, look, these other people aren't going to be getting loans because the interest rates are already over 5%, right? Mm-hmm. But now look at this trajectory of what this thing is doing. And then when you compare this to 2021 and say, wait, that was a super hot market. This is supposed to be a terrible market. Why is this happening? Is this just inventory? Because inventory has been pretty low since the end of 2020.
Well, I think it's because it's a couple of things. First of all, I think people understand that this is what interest rates are, and they're no longer fazed by them. I think the inventory is low, and people are jumping on anything good that's coming on the market. And again, it's a time of year. I think that and I recognize what you just said, that time of year is really not as crucial here, because you're comparing the same time of year with several past years. But when you take the whole thing as a body, it does play into all that.
What's most interesting about this is, remember, this was our leading indicator for when we called the market bottom in January, that we got laughed at about. And then, so I want you to remember, these homes that are being listed now will sell and go under contract a month or two from now, right? And now I'm going to show you price per square foot. This is closed. These are closed price per square foot. So you can see here, this is that 256 number. You could see it's per square foot. You could see substantially more than 2021, which was a hot market. Like, home prices are still way, way higher. This is what's really interesting. We were named one of the worst 5 markets. It was like San Francisco, San Jose, which is basically one market. I think Boise and Austin and Vegas were told these would be the 5 worst markets. As a matter of fact, Zillow's rent report listed 400 markets and year-over-year rent, and Las Vegas was the only one that rent didn't go up. So we were literally the worst. This is the worst. This is the worst market ever. And I don't know, to me, this doesn't feel like the worst market ever. There's no inventory. Home prices are going up. What shocked me was the price per square foot. We did our video last week was $253, and in a week it's $256. And what I think is going to happen is we're going to see over the next 2 months, what's going to reflect is all these homes that you've seen these list prices going up, that you're going to start to see this when they close, and we actually get to find out.
Right. So there's a difference, obviously, between list price and sale price. And sometimes the sale price is higher, sometimes it's lower. Considering the lack of inventory, considering everything that's happening in our market, we expect that price per square foot will probably edge a little bit higher before it levels off and starts to decline again for the fall.
Okay. Now, the other thing here is inventory. I'm going to put up the inventory chart. Now, what we're going to do is we're going to do the same analysis that we did on the other chart. Go all the way to the left. As you can see, inventory was a little bit below, but in 2018, but it was already starting to go up. Now, this is the dashed line. This is the 7-day. This is the leading indicator. This is like, hey, inventory did this for the last 90 days, but for the 7 days, it's done this. So this tells you where it's going, right? You could see it basically was already getting ready to, inventory was climbing. The same thing in 2019, inventory was starting to climb. The 7-day average is more. 2020, 7-day average was more. Of course, that reversed. 2021, it was the same. And then inventory increased a little, and then it went back down. But in 2022, last year, the 7-day average was already way more and shooting up. And we talked about this. We said, hey, and if you could go back and look at our, May and June market updates where we said, hey, look, it's increasing. We just have to see and wait what's going to happen in the fall. This is when the crash bros 100% bought into. It's over. 40, 50% price declines, 40,000 homes on the market in Vegas, it's going to happen. And then if you notice here, the inventory never got back to a normal market. See, 2019 was a normal market. We basically almost got back there, and then it started declining. But what's most fascinating is if you go all the way to the right, that the 7-day leading indicator is still less. So we still have, normally we're starting to get more homes on the market than
the absorption rate starts to decline.
Yeah, we get more homes on the market than people are buying. That's not happening yet. So what does that mean, like, for the next couple months, potentially? Like, if you're buying a house in Vegas?
So it means that hopefully you'll have an opportunity to get a good house. Hopefully more sellers will come on the market, but it's going to be tight. We're not seeing inventory climbs. We're not seeing that absorption rate get to a point where we have climbing inventory, but we are still having homes come on the market. So it's not like you don't have that opportunity. I just think that you're not going to have a lot of choices.
I'm going to say the same thing now. I said exactly this time last year. The 4 best months for a buyer to go find a house are going to be October, November, December, and January. If you look at this inventory chart, those literally were the months where inventory was the highest. If you look at the dash line, the 7-day average, those are those 4 months. Those are the months, because what happened in, I think it was October 27th or somewhere in there, inventory started to peak and go down. There were still, no, homes were on the market longer. You could negotiate closing costs. You could probably get less than list price. That's gone right now. Will it come back? It'll come back in the fall. Now, I don't know, and nobody knows what home prices will be in the fall. It's very likely they could be less. All of the estimate, like almost every analyst has said there'd be 5% less or whatever. 1 or 2 have said they would be more. And I don't remember who that was. We just did a video on it maybe a week or 2 ago. 1 or 2 actually said, oh, year over year, January to January, home prices be up in the US, and they named Las Vegas specifically. So I don't know. To tell the truth, nobody knows what's going to happen to home prices. But I can tell you right now that I wouldn't bet on, I wouldn't bet on, if you find a house that you like and you can get, and it's affordable, and you have enough reserves to, make payments if you lose your job or whatever, then I would not wait to buy the house. I'm not saying you should buy right now. I'm not saying this is a good time to buy, but I can tell you that looking at the price chart that we just showed you, a good time to buy would have been any time prior to today, pretty much.
Okay, so 2 things. One, I agree with you that particularly considering the limited inventory, if you find that house that you've been looking for, then I would encourage you to consider making your dreams come true and getting the house, because that a house or a similar house may not be available in the fall or whenever the planets align for you. Okay. The next thing is interest rates. I know interest rates are high compared to your to 99% of the interest rates out there that are below what interest rates are at today. However, interest rates are temporary. So again, if it makes sense for you, that might be something for you to consider and refinance down the road. I'm not saying to buy a house now. I am saying to make a conscious decision where you have made a list of everything that's important to you, and this is a choice that you're making with eyes wide open, right? As far as the market's concerned, I agree with Todd. We don't know what the market will do in the short term. We know that in the long term, so 5 years from now, 10 years from now, 20 years from now, houses will be worth more than they are today. Okay. Do we know what they're going to be worth next month, 6 months from now? No. Everything in the world moves so fast at this point, and there's been so much change, I think, for all of us over the last few years, that to hang our hat on something specific is a fool's errand.
Yeah, I agree. But bottom line is, we put our money where our mouth is. We have bought another investment property within the last 2 years. We've been actively looking for more, including second home. We even looked up in the San Francisco Bay Area, in the city of San Francisco, because it looked like there were some deals there, like homes that were, maybe stuff like that, because I thought there was maybe opportunity up there. But anyway, so I think there's still opportunity. I don't know what's going to happen with home prices, but I'm betting, on the long game. I don't know what's going to happen to Tesla stock in the next year. I don't know what's going to happen to Bitcoin in the next year. But I can tell you this. Rents and home prices will be more 10 years from now, almost certainly. And you know what's funny is if you'd have said that in 2006 at the top of the market, you'd have been right in 2016. Home prices were more, even though that was a super bloated, inflated sort of fake market with all the fake buyers and fake building and fake, loans and things like that. So.
Okay, so hopefully you made it to the end of the video. If you did, we really appreciate it. We want to make sure that we let you know that we're just a handful of videos away from our 1,000th video. Please leave us comments, especially any questions that you'd like us to answer in the 1,000th video. I know that we normally answer questions in your comments, and we'll continue to do that. But maybe what we'll do is we'll go back and grab some questions from the comments and include them in the 1,000th video. Let us know any particular topics that you'd like us to cover, and if we can, we will, and if we don't, we apologize that we do not know everything in the world about real estate or other things. We appreciate you watching. Please subscribe, hit the notification bell, share the video, like the video, and we'll see you on the next video. Bye.
Bye.